Greetings everyone, Corey here. Let's quickly go over the changes we're starting to see at the federal level related to banking and crypto. This week we saw the Office of Comptroller Currency come out with new interpretive guidance that basically says actually a few things. The critical areas, it says that banks are allowed to custody and provide services to crypto, the industry broadly. They're also allowed to operate nodes, which are relative to specific blockchains. They allow the confirmation of transactions. And so what this means is basically you're going to now start to see your large US financial players being able to custody and get more involved in the digital asset space more broadly. The one thing I would say is a bit of hold your horses, because when it comes to banking in the United States specifically, you've got really three different major governmental agencies that are involved. You've got the OCC, which I just spoke about, which is the Office of Comptroller Currency. You've got the FDIC, which is the Federal Depository Insurance Corporation. And then you've also got the Federal Reserve that regulates banks. And so this was really the first discussion from the OCC around reducing the friction and restrictions on banks. And what they basically came out and said is that they just want responsible market participants, and they don't think it's necessary to have a lot of the extra rules and requirements and restrictions that had previously constricted banks from even entering into the space. And they also withdrew from the joint guidance on crypto policy that under the prior administration was basically a joint guidance from both the OCC, the FDIC, and the Fed that all came out on the same day. And it basically told banks, we don't want you involved in this space. And if you do get involved in this space, you're highly likely to face increased regulatory scrutiny. And as you may be familiar with the terms around Operation Choke Point 2.0 and the banks, it's had a chilling effect both on banks entering the space providing custody services, as well as projects that are or were looking to serve different types of businesses and clients in the space. And so that guidance and those rulings had the net effect of really neutering the industry. And so this I would consider to be a first policy step. And the first policy step is that the OCC is the first of the three, again, OCC, FDIC, and the Fed, of the federal banking regulators that are coming out and saying formally that we're changing our policy position as it relates to crypto, digital assets, and the ability of the large banking sector to get involved in that space. And so when I said earlier, hold your horses, I think that we're really going to have to see both the FDIC and the Federal Reserve rescind that same guidance before you're going to actually get banks that truly operate in the all clear and start to offer these sorts of services. I would suspect, again, there's no way to know 100% that behind the scenes, things are in motion to allow both the FDIC and the Fed at some point to come out in the next few months and basically mirror the position of the OCC, given the change in administration. And so, be on the lookout for that. And what does that mean if you're a market participant? Well, a few different things. Let's take a crypto project who's looking to start in the United States or looking to re-domicile into the US. I suspect over the coming months, 6 months, 9 months, that sort of thing, it will be much easier for these projects to get bank accounts in the United States first, so they won't be subject to all the normal things around anti-money laundering, know your client, all that sort of stuff. But all the Operation Choke Point 2.0 matters, fingers crossed, should be kind of resolved by the time we get 6 months from now, 3 months from now, that sort of thing. And what that will mean is if you're looking to enter the space or re-domicile into the States or start a project, you now will be treated pretty much on equal footing like every other startup that operates in America where you can get a bank account. So that'll be huge. And then the other thing I think it's going to mean is that for the banks and the members of the banking system who aren't necessarily the largest, the JP Morgans of the world, if they're not in that category, there's now going to likely be an M&A boom, because once you allow banks to start doing custody, that's laying the groundwork for really allowing DeFi to enter the US space. And DeFi stands for decentralized finance. And for those who aren't familiar, just to give you a high level, decentralized finance just literally means taking the traditional concept of the financial system and allowing those concepts to operate on a distributed ledger or a blockchain type of technology. So a simple example would be DTCC, which is the Depository Trust and Custody Incorporation. And what DTCC does is effectively, they're a 20th century version of what we think of as blockchain. So when you own your Apple stock or your Google stock, etc., and it needs to change depositories from a record keeping perspective, that happens inside the DTCC system. And then that connects over to Europe through a system called Euroclear. Don't need to go into the plumbing of the financial system, but what this is going to mean longer term is that you're going to now have banks experimenting more freely without the fear of regulatory crackdown or fines or sanctions. And then you're also going to have, I think eventually this is going to lead to more mergers and acquisitions in the space, because if you're a bank now, if you're a larger bank, you probably have been playing in this space behind the scenes. So you may have teams already standing, ready to go and operate. If you're a mid-tier or a smaller bank and you haven't been in this space at all, and you notice, potentially a way for a competitive advantage, you're going to be thinking long and hard about potential acquisitions that bolt on to allow you to now acquire new customers, right? And so this should be positive for the sector in all ways, from the standpoint of basically new liquidity coming into the market. One thing I would say, just to flag here, I do expect that as the traditional financial system meets the decentralized financial system, as well as the blockchain universe in general, I don't expect it to be without any hiccups. And the main reason I would say that is, for folks who are in the digital asset space or the crypto space, you will know that the culture is very different. So what I would just say on that is, as the culture of Wall Street meets the culture of crypto and DeFi, which is both different from a business perspective as well as generationally, I wouldn't expect it to be all exactly smooth sailing. So I can't say one way or the other, what does that mean? Do I expect a crisis? No, I'm just saying that the culture of a large bank, the culture of a regulated financial institution is not the same as the culture of a fintech, and it may not be the same as the culture of a DeFi project that operates across multiple jurisdictions. And so with that, we just want to keep that in mind. But I do think this entire development is generally going to be positive for the industry. And be on the lookout for more videos around this topic as these things come to light and the policies start to take shape. I may be putting out some sort of writing around this as well. So stay tuned for that. And with that, we'll let you go.